IG market strategist, joining us now from Melbourne. Stan, great to see you as always. Just wanted to ask you what you made of the session there. Was it pretty cautious given that we're waiting for that dump of data, particularly that crucial non-farm payrolls read?
Yeah, absolutely. Just a combination of a couple of things. Of course, the market's enjoyed a very, very strong run recently, and of course the S&P continues to rally sort of towards those record highs. So I think at those sort of levels, investors are always going to be a bit nervous and will look at exercising caution. Of course, we also have those non-farm payrolls numbers due out later today. And just from a perspective of profit taking, I think this certainly just warrants a little bit of caution for a lot of investors as they now start to think maybe there will be a catalyst for a short-term pullback in the trend. So that definitely was one of the main reasons. The market's looking for around 180 to 182,000 jobs added, depending on whether you're looking at a Reuters poll or a Bloomberg poll. But some analysts are actually very bullish on the number. They're looking at, like for example, Goldman Sachs is looking at a 200,000 read on the jobs added front. Of course, that's quite bullish, and it does seem like following the recent government shutdown, eventually it will lead to a bit of a pullback in the US dollar. The idea is basically if, for example, the number comes in better than expected, it's expected to lift the US dollar momentarily, but of course, considering the skewedness of the data now that we had the US government shutdown and the fiscal uncertainty going forward, then there is always a strong possibility that we'll see some profit taking on any US dollar rallies, and there will continue to be feelings that tapering won't be happening anytime soon, particularly with negotiations probably likely to resume in the new year as well. So there's definitely a lot to consider. But should the number come in better than expected, we ultimately feel that this will result in a bit of a pullback for the US dollar, as investors just feel that there's no real impetus for the US economy, and of course the uncertainty on the fiscal front will hold it back.
Is it a concern, though, that everyone seems to have priced out tapering at the December Fed meeting? I mean, some economists are saying, look, there is still a chance that the tapering could begin then if, you know, the data between now and then, and there is a fair bit of time for data to be released, shows that the economic recovery is still on track.
Yeah, absolutely. There is that possibility that tapering will begin by the end of the year. Of course, the Fed had been looking to start tapering by the end of the year and completely finish these asset purchases by the middle of next year. But the reality is there's a lot of uncertainty coming up for the US, and of course with the various Fed members, of which they're probably the best indication of exactly what to expect from the tapering issue. They've been very mixed, and I think more of them actually feel that caution is warranted considering the fiscal uncertainty. So just that considered, I think, is enough to see the Fed hold off till next year perhaps. And of course, don't forget we've got Yellen looking to take over as well from the helm, so that's another bit of uncertainty for the market, and of course a bit of a policy shift. But we do know that Yellen's a bit more aligned to Bernanke, so chances are we can expect them to continue these purchases until they're absolutely sure that removing the asset purchases will not derail the recovery.
Just turning to that move in the currency markets, the US yen, US dollar, a strength there back above 98. What are going to be the main drivers of Japan this week?
Yeah, we did see the yen resume its weakness yesterday. Of course, there was a very disappointing trade balance number coming with a trade deficit coming in much worse than expected at 1.09 trillion yen. So that triggered already some yen weakness in yesterday's Asian trade. And of course, BOJ Governor Haruhiko Kuroda was on the wires as well later on in the day, just highlighting the importance of them getting to that 2% inflation target, and of course saying that they will do whatever they can to ensure that this happens. So that really did give the dollar yen a bit of strength, and of course it pushed back above that 98 level. It's currently hanging around 98.20, and that's always positive for the Nikkei, which we're currently calling up about 0.6%, and it's likely to lead Asia higher today. Later in the week we've got Japan's CPI reading, and that's on Friday, and of course being the main inflation read for Japan, it will definitely carry a lot of weight. So we are eyeing a fairly big week for Japan.
And just finally, what's your opening call for the Aussie market this morning?
Yeah, after the hefty gains we've seen recently, today's the first day we're actually just calling it flat at 553.53, so there's nothing much in it at all. But of course, the focus will be on BHP today with its first quarter output due out. Its ADR is actually pointing up 0.6%, so the positioning looks to be certainly to the positive on BHP, and of course particularly after the recent improvement we saw for the other iron ore miners, including Fortescue, Atlas Iron and Rio Tinto as well. Then definitely I think there's a lot of optimism that BHP has also started to see strong signs of improvement, particularly from an iron ore perspective. So this report should see a bit of buying come through BHP. We don't really think it will disappoint, just mainly because of the improvement we've seen from China as well. And even if we look at the data out of China, it showed that there's a big jump in imports. So we do expect to see a bit of momentum pick up for BHP. And at the same time, we've got a few AGMs out. We've got Brambles. We also have, I think, Macmillan Shakespeare with its AGM along with Bradkin. So there'll be interesting stocks to look out for. There's always a few throwaway comments from some of these AGMs. And of course, we've got, I think, Oil Search's third quarter output report. That'll be an interesting one as well. Just from a David Jones perspective, I think there will be a bit of volatility in the short term. Of course, the resignation of Paul Zara will definitely come with some instability for the stock in the short term. So that's certainly something to look out for today, and hopefully there will be some opportunities to buy on the dips.
All right. Even though I guess we were hearing yesterday from the ACCI business group talking about, yes, there'd been an improvement in sentiment, but certainly they weren't predicting that that's going to necessarily continue. They think that maybe the rebound in business confidence could be short-lived. I mean, are you concerned at all for a stock like David Jones heading into this important retail time of the year?
Yeah, consumer stocks are always very sensitive to such moves, but I think all things being considered, the Australian economy just certainly looks like it's started to turn a bit of a corner for the positive, and I think that should be quite a good indication for most of these cyclical stocks like David Jones. And of course, considering the fact that the market's actually starting to rally, we're at 5.5-year highs or so at the moment, it should be a situation where all these dips will be used as an opportunity to accumulate stocks, as we're in some pretty big uptrends at the moment. So I don't think it will be too big a drama, but as long as they can show that they've got a good succession plan in place and that they still do have a pretty good strategy going forward to help lift especially their online business and get more sales going from there and maintain a good cost structure, then ultimately investors should see value in the stock.
All right, Stan, always great to get your thoughts. Thank you so much for that.
Cheers, Brady.
Stan Shamu there from IG. And let's get some more on that BHP report that Stan was mentioning there. BHP Bulletin expected to report strong iron ore production for the September quarter thanks to continued strength in the iron ore price. The production numbers, which should be out before the open today, are expected to beat previous guidance.